Hey, what's going on today, guys? Today I decided I'm going to go ahead and make this video that I've been sitting on my hands about making for the longest because I just didn't know exactly how to feel about um, getting on the internet and showing my portfolio, my investment portfolio. This is one of my portfolios. I got four that I currently have active and money in and stuff like that. This is my Robinhood. I also have an M1 Finance, Fidelity, and Charles Schwab. But those portfolios, well, the M1 Finance, I've already shown that on here. But the Charles Schwab and the Fidelity, I'm probably not going to show too much. I don't know. We'll see. But anyway, I think this will be a great portfolio for me to show on YouTube, and just to kind of have like that accountability factor. I've been really wanting to do this for that specific reason, and you know, I just thought it might be interesting to get others' perspective, and just kind of have a good conversation going for the channel, right? Okay, so anyway, let's get into this. Okay, so for this particular portfolio, I have 16 stocks. So I'm just going to quickly run through these stocks. I'm not going to do too much talking about, why I own this stocks or stuff like that. I'm not going to get too detailed because this would make this video just way, way, way too long. So, all right, so just like any other YouTuber that shares a Robinhood portfolio, first we start off with daily up 1.1%. For the week, I am up 4.6%. For the month, I am up 21.8%. 3 months is 15.9%. 1 year return is 19.7%. And my all around portfolio return since inception is 15.7. So, not too bad. Not too bad, to say the least. Okay, so first stock I have, we're going to start from my smallest investments and work up to my largest investment in this portfolio. So I have 4 shares of Canopy Growth at an average cost of $22.66. So I'm currently down 4.7% on this stock, or just $4. Not a big deal. I only have $90 like all around invested into this company, but I do actually plan on buying more shares. I'm just waiting to kind of get it at a deeper discount, which I wish I would have bought some more before today, because it's up 12.4% today. So I usually like to buy stocks. If I buy a stock and say it goes down like double digits, like if I'm down like 10% or something like that, that's usually when I want to buy more. Whenever I'm down double digits, that's when I tend to buy more. But you will see that there are stocks in this portfolio that I am currently down double digits on that I'm not buying more of, simply because my bullish thesis has kind of been altered a little bit, and I'm not feeling as comfortable with adding more to the position. So yeah, you'll see. Okay, so yeah, Canopy Growth. Yeah, this is a cannabis stock, one of the largest ones out there. So yeah, that's why I bought this one. Like I said, I can't get too detailed in this video, make it way too long. But next stock I have is, come on. Next stock I have is iRobot. I own 2 shares at $47.05. I'm currently up 4.8%, so not too bad. For those of you who don't know, iRobot, they make the little Roomba vacuums that, the robot, self vacuuming robots and stuff like that. They also have mopping robots, and they're working on a grass cutting robot as well. So don't know how well that's going to work out, because cutting grass is a lot more complicated than vacuuming carpet, but we'll see. Next stock. Next stock I have here is, oh my God, Neo. I bought this stock because I was thinking of it like, Tesla of China. And I really like Tesla. So, yeah, didn't quite work out too well though. They canceled their previous earnings call. I've never seen that happen. That that didn't go over well with me. And so yeah, I own 52 shares, an average cost of $5.18. I'm currently down 61% on this stock. Crazy. So yeah, I rarely, it's like once in a blue moon that I buy a stock and I'm down this much on it. Because usually, even if I were to be down like this bad, usually I'll buy more or something like that to lower my cost basis to where I'm not down this bad. But yeah, Neo, I really gotta kind of, I'm not, the only reason I haven't sold it yet is because I haven't completely given up on it. I still think they might have a chance to, be a big player and, electric cars in China and stuff like that. I really still like the company, but man, they have just dropped the ball. Let's just put it that way. Okay, moving on. Next one is Alibaba. So Alibaba is one of the biggest, if not the actual biggest, I think, companies in China. And so this is a e-commerce type of company. Pretty much think of it like Amazon of China. Okay, to sum it up simply. Okay, so I own one share at an average cost of $164.74. Currently up 13.6%. So not too bad. Wish I would have bought more. Should have bought more. Still thinking about buying more because let me see. I think their all-time high was like two. No, was that it? Okay, 208, 208. Yeah. So yeah, we still got some room to run back to all-time highs and all that stuff like that. But yeah, so yeah, there's Alibaba. Next one is Align Technologies. Now, the only competitor Align Technologies has is Smile Direct Club, and their stock performance has been complete trash since they IPO'd. So, Align Technologies, if you don't know, they make the invisible braces and stuff like that. So I really think that this is huge. I think that this is a company that's going to be around for a very long time and has potential to grow even more as time goes on and more people start to go transition away from the traditional wires and wired braces and stuff like that and use their little clear plastic pieces that you keep putting in your mouth, and you interchange them out with different ones that eventually over time will straighten your teeth just like regular braces would, but without all the wire and hassle and stuff. I really like Align Technologies, and they have zero debt on their balance sheet. Wonderful, beautiful. Should have bought more. Yeah, so I got one share at an average cost of $199.09, currently up 30%, doing awesome. I'm happy with this one. Let's see. Next one, eBay. eBay is a e-commerce company, so I think they got bumped down to the third largest. Well, after, because I think it goes Amazon, Shopify, and now eBay. I think. And so they recently, I know Shopify recently bumped somebody off, and I think it was eBay, or bumped somebody down. I think it was eBay. So yeah, eBay, I own 8 shares, average cost of $38.41, currently down 8%, $25. It's no really big deal, but yeah, it is what it is. I still like eBay, and they recently just started paying a dividend. So yeah, I've been collecting on dividend as well. So yeah, pretty decent. Not my best performing stock, but it's a good one. Next one is Tencent. I recently just started buying this stock probably like a few weeks ago. This stock is the second biggest company, I believe, in China, and they are basically a company that invests in other companies. Like if you go to China and see like who's like backing some of these other companies and stuff like that, you'll find that Tencent has a foot in just about everything. Like, I mean, literally every type of company there is to have money invested in, Tencent invested in. They are well diversified in all their investments and stuff like that. So yeah, I own 7 shares at an average cost of $41.29. Currently up 1.2%. I'm definitely looking forward to buying more Tencent over the next few weeks to months or so. As long as this trade war thing is still going on, I really think that these Chinese stocks, this is the time to be buying them right now during this trade war. Because once this trade war gets worked out and the negativity of the trade war can kind of subside from China and even American stocks as well, certain particular ones that is, like iRobot. That's another reason why I bought iRobot, because they're dealing with trade tariff issues and stuff like that. So yeah, once all that stuff gets worked out, I think all these companies are going to benefit huge from that trade war being done and over with. Next stock is I'm gonna have to run through this a little bit faster because I'm running tight on my time. Okay, so next one, IQ. This is another Chinese stock. It's kind of like the Netflix of China, but they've actually said that they are more like a YouTube of China. So something like a Netflix YouTube mix of China. Yeah, so I own 20 shares at an average cost of $28.60. Currently down 31.6%. Not looking too good. And this is actually a stock that I'm actually thinking about taking my money out and just taking the loss. Because it is just, this stock has just been trading like trash over the past few months. It's been ridiculous. I mean, it recently had a huge, like, 13-14% jump after earnings, which is great. This stock always jumps after earnings, man, but it always trades right back down. And so it's just like, just when you think that this stock is about to go to the moon, it just says nope, never mind. So yeah, IQ, there's IQ. Next one is Nvidia. They make computer chips and AI chips for self-driving cars and other little stuff like that. They're basically computer chip maker type processors and stuff like that, things like that. Okay, I'm no computer geek, but if you know anything about Nvidia, you know what I'm talking about. It's like an Intel or AMD. They're all similar like that. Okay, so I own 2 shares of Nvidia at $159.82, currently up 29.9%. Looking good, happy, liking that. Moving on. Next stock is Verizon. This is like my 5G play stock. So Verizon has actually been working on building out an actual 5G infrastructure. I can't say that word. Okay, they've been building out their 5G stuff, and I think Verizon. When you think about Verizon or AT&T, would you rather buy Verizon or AT&T? I'm buying Verizon because they have a better balance sheet than AT&T, which means once they start ranking in profits from the 5G era and all that, that's about to unveil over the next year to 2 years or so, they're going to have more money to be able to stack and not have to worry about paying off debt with that income, that extra income that they're getting from the 5G stuff and all that stuff like that. So yeah, and they pay a really good dividend. AT&T's dividend is actually higher, but again, the debt, balance sheet, Verizon's better, in my opinion. But I like AT&T too. But yeah, so 4 shares, $56.45, currently up 5%. I'm actually wanting this stock to come down some so I can buy more, because I actually want to own quite a bit of Verizon because they do have a very good dividend, and again, 5G. So I see growth potential in this stock as well. A AMD. Now this is a stock that I've made videos on in the past, and yeah. So I own 20 shares at an average cost of $12.42. Look at this. This current price is $36.27. So I am currently up 192% on this stock. Wow. This has been my best performing stock ever. So yeah, needless to say, I'm very happy about this. Now, when it comes to am I selling this stock, am I buying this stock, I am not selling it. I'm not buying it. I have no intentions on selling it or buying more anytime soon. Now, maybe if the stock price comes down to like I don't know, like $20 or something like that, maybe I'll buy some more. Depends. But yeah. So yeah, up 192%. Man, that is awesome. Next stock is, okay, we're winding down here, guys. All right, next stock is Zillow. I own 20 shares of Zillow at $45.82, currently down 17%. I own Zillow because pretty much they got a uh what is it? Like a conglomerate as far as like real estate goes. Like when you have a conversation about real estate, can you really have an in-depth conversation about real estate without Zillow being brought up? Just anything. It doesn't matter what it is that you talk about when it comes to real estate. Zillow always gets brought into the conversation. Something about, oh yeah, looking at this on Zillow, looking at that on Zillow. It's you gotta always go to Zillow about something. So because of that, I really think that, you know, I mean, I know there's also Redfin as well, but I mean, I've had conversations about real estate and talked to people who are in real estate, and they bring up Redfin, but they bring up Zillow a lot more. So yeah, there's other reasons why I own Zillow as well, but again, I can't get into all the in-depth stuff because this video's getting way too long. Okay, next stock. This is my second biggest stock in this portfolio, second biggest investment in this portfolio, and I own 5 shares at an average cost of $157.22. Currently up 21%, doing great. This is Facebook. If you don't know what Facebook is, man, where are you, under a rock or what? I mean, you gotta know what Facebook is. You know, it's the social media platform, the biggest social media platform out there. So yeah. And last but not least, certainly not least, my biggest investment in this portfolio is Tesla. I own 8 shares at an average cost of $245 flat. Don't know how I wind up to manage that happen. But yeah, I'm up 37%, 37.4% on this particular stock. Tesla, again, especially for this particular channel, because I talk about Tesla quite a bit, needs no intro. So yeah, electric car company, self-driving cars, all that stuff, the future, right? So yeah, that is my portfolio, guys. That is my $8,000 portfolio. Boom. Oh, there you go. That is my $8,000 portfolio. So, yeah. With that being said, if there's anything in any certain companies in this particular portfolio that you like, don't like, maybe you own them or maybe you don't own them because of certain specific reasons, you know, whatever it is, leave a comment below. If you enjoyed the video and you like me sharing this portfolio and you want to see more videos of me sharing my portfolio, or my M1 portfolio or whatever like that, you know, let me know so I know to make more videos like this. And yeah, until next time, guys, peace.